Good morning, traders, friends and family from around the world. Welcome to a new month and a new day, and a new week of trading. Yeah, welcome. Today is Mentorship Monday, in fact, the first Monday of the month. First trading Monday of the month, I should say. And we're going to have a lot of good and exciting discussions today, and questions and answers and enlightenment and insight, and hopefully some profitability as well. It's a lot of good things to talk about. Danny says, good morning, guys. Looking forward to Mentorship Monday. Me too. Thanks for being here, Danny. Steven says, good morning. Happy May. Yeah, happy May. Zane, what's going on? Hope you're doing good. Let's see. Let me wait for maybe 20 more seconds. Just let a few more people pile in. Danny says, thank you, Jeremy, for your teaching. Oh, yeah, my pleasure. Of course. Absolutely. Here to help, here to assist, here to enrich lives. We're doing a great job together as a team, for sure. So most certainly thank each and every one of you for being here. All right, awesome. Well, let's get started. Pretty much what we're going to be doing today, day trading, just looking for some gaps and looking to potentially day trade those. We may or may not take an actual trade today. We'll see. We'll do our best. But what I can say is objectively, one of the reasons we're looking for gaps is to narrow down the list of opportunities. I mean, that's just one thing to do. There's a lot of ways to narrow down a list of opportunities. Gaps is one of those ways in which to do so. And finding gaps, pretty easy actually these days. There's a lot of different scanners. You can use brokers, charting softwares, websites. What we'll do this morning, Bar Charts has actually had the ability as of recent to update about 8 o'clock Central, 9 Eastern with some of the gaps. And since it's earnings season, you're going to get tons and tons of gaps today. These are the gap ups and gap downs. We got a few. So what I'm going to do is just go through the gap ups, and then we'll go through the gap downs. And really what I'm looking for is a gap where I can look at it. I can look at the stock and I can unequivocally know the direction and also know how people are feeling immediately. So I'm not really going to look at OCN because it's a little too inexpensive. $2.89, at least for me. When I'm taking those trades, there are some people out there who will take really, really cheap trades, inexpensive stocks. I'm just not one of them because I know the effects of slippage. And bottom line is, if you're trading a stock with $3, $4, $2, $1, your stops are somewhere around 5 to 2 cents. And if you're trading properly, that's going to be a lot of shares. And 2 to 5 cents can just be a bad print or a bad order, and you can lose an entire R. Most people who trade very, very cheap stocks, they don't use the R system, and they trade in such a way that when they do lose, they lose very, very big, because they let the trade go into their stops some, and they have really, really big drawdown days that affect them in a big way. Because again, really cheap stocks, there's nothing wrong with them intrinsically. It's just that if you're using a really good system for calculating risk and calculating shares and calculating entry size, the cheaper stocks, you just have a massive, massive stop price, or massive amount of shares, very small stop price. It's just something to consider, I guess. And we can always talk about that a little bit later. But Twitter is the first on this list, ironically enough, TWTR. And Twitter, we were looking at getting into a trade bullish on Twitter, and it seems, unfortunately so, that Twitter is kind of maybe running without us. So I was looking for a pullback, and we did get one on Friday. It just wasn't quite big enough. I wanted to pull back to get in bullish. So this gap up today, here's the two things that I'm looking for. I'm looking at this gap. So I'm coming down here and I'm seeing the price of 17.11, which is right about here. And the first candle I look at is the prior day's candle. So the candle that just happened, which was yesterday. Yesterday being Friday. And I'm trying to figure out what were these people thinking right here. So this candle is a selling candle for sure. That candle is a selling candle, and we can get to determine who was selling there. It could be people selling short and or people who bought here who are locking in profits. You can get two types of selling, right? You can get people who are selling to lock in a profit, and you can get people who are selling to try to cause the stock to go down. They're selling high, trying to buy low. But even when people are selling for a profit, you have to remember that's also a sentiment that can be trapped. They can feel upset that they're losing money, right? Because if they bought down here and they sold, sometime Friday, and now we're gapping up in a bigger way today, they're going to say, oh man, shoot, I sold too early. I need to get back in so I don't miss this move. Right? I locked in some profit, and they'll start saying, well, it's just house money at this point, right? I locked in a profit, so I'm going to get back in the next day, as it's moving higher. So that would cause some buying, right? That would cause that buying pressure. And then, of course, if you're selling short, if you're getting in bearish, and you got in bearish on Friday, then you are holding bearish shares over the weekend. The only way to exit a bearish position is by buying to cover, which also creates buying pressure. So this is a pretty good gap. And what I normally do is once I kind of analyze the daily, the prior candle, I then look for pretty obvious support and resistance lines. And gaps are a great way to start. So there's a gap right there. It's where it opened, and there's a gap right there. And so I just drew a line to connecting those two. That's all I did. And you'll notice we're actually above that gap. Again, we're up in here. So we know that there are some people probably who were still short some shares of Twitter since that day. And they were making some good money, and now they're going to be losing. So they're going to end up buying to cover, because some people hold, a position like that for a while. So looking at the daily sentiment, looks like this gap will likely be more bullish. So I come in here to the 5-minute chart, I turn the extended hours on, and I look at the trend for the pre-market. The more volume it has, the better. But you'll notice here's the resistance from Friday, right there. There's the high of the day, and you can see this kind of pre-market candlestick pattern that formed. We kind of broke out of that, trading up, and you have a resistance and you have a support pre-market. So if this is a bullish gap, well, it is. Doesn't mean that it's going to work, but what it means is you can come up with a direction, and that's always what's important when you're day trading, is to come up with a direction of where you want to trade something. So if you're looking at taking this bullish, what you could say is, all right, well, I'm definitely looking at playing it bullish, and now you have an idea of where you could buy here at that support, and you get to determine, do I want to buy it blind? Which means you set a limit buy order up and then walk away. That's what I call a blind order. If you just have a limit buy, which at this price would be, let's just say $16.99. And then let's say you have a stop down here at, I don't know, $16.90. So that would be 9 cents of risk. And you can set that up as a limit buy and just kind of walk away. Now, what's the downsides of that? Well, the downside really, the only real downside is you could lose an R. You could lose your risk. That's really the only kind of downside in trading in general. Sometimes, some situations, you can lose a little bit more, if you get slippage or something. But that's the only real downside of just doing blind orders. The other small downside is, and this is all your fault, is that you could have placed the trade incorrectly. And that happens more often than I would like to admit with a lot of traders, and it happened to me for a very, very long time, is I just simply placed the wrong order. So I would do a limit buy and I would do an order incorrectly. I'd do too many shares or too few shares, wouldn't do the right price, so on and so forth. So I eradicated that by reading all of my orders aloud every single time. Reading the whole thing aloud, and that's very, very crucial. But when you're doing a limit buy, again, it's just all about doing the analysis, looking at the candles, finding support and resistance, and understanding the sentiment. If you're doing something blind, oftentimes for my impulsive traders, my really, really spontaneous is not the right word, but you know who you are. Traders who don't mind trading, traders who probably overtrade, people like me who, you can find a reason to take just about anything. Oftentimes these kind of blind orders are good because you're not going to be by the computer to mess it up. That's where you have to have that discipline to set it and walk away, set it and forget it kind of thing, as you figure out that trade and you just kind of set it up and then you just walk away. Doesn't mean it's going to work, but you can't be by the computer to influence it. Once you're in the trade, there's nothing you can do. And most of the time, if you walk away from a trade, you'll find that it's going to work out in your favor at least a little bit, and will give you less stress and less heartache than you just sitting here watching it candle by candle by candle. So that's kind of the steps that I do when I'm looking for directions. I pull up the gap, I look at the sentiment, I try to determine exactly where we're going to be gapping, and then I figure out, once I have the direction, once I have the sentiment, I figure out where I want to take the trade. Right? In this situation, I want to buy low, sell high, so I'd rather buy at this support down here. Otherwise, if it runs without me, let's say it never gets filled and it breaks that resistance, what now happens? Well, once it breaks that resistance, then I can go, okay, same exact thing. I want to buy it when it pulls back. But we wouldn't know that until it actually broke above, which means either one of two things. We'd either have to watch that happen, number one, or number two, if you did set up this order ready to go, it would just never fill, obviously. And then let's say you came back an hour or so after day trading and you see that it's broken out, then you can set up a new entry and kind of place it from there. So the interesting thing about it all is I feel like it was a long time, but over a year, I had a rule when I was day trading that when I placed a trade, I had to walk away from the computer for an hour when I was day trading. And I would set these orders up all the time, and I would set up the OCO order, right? Order cancels other. So I'd have an OCO, or I'd also have an OT OCO, which stands for order triggers other cancels other, which simply means once this order triggers, then you have a stop and then you have a target, and you can truly automate your trading at that point. An OT OCO, I don't know why this is not drawing correctly. An OTOCO is an order that you want to figure out if your broker has, or you want to learn how to do it very well. With stocks, it's almost not an issue ever. With options, it takes the right broker. Most brokers should be able to do some form of an OTOCO. And again, what that is order triggers other cancels other, which simply means you can set up an order, whatever that order is, right? Set the order up to do X, Y, Z. And then once that order triggers, right, once it goes live, once it becomes active, then you have an OCO order, which is just simply and oftentimes, usually, your stop and your target. Because again, keep in mind that you don't really want to be in front of the computer all day. And I'll tell you this so that you make sure you don't hurt my feelings. If you come into the morning room, set up a trade and say, hey, Jeremy, or Brad, or hey, Latoya, I'm leaving. I just set up my trade. I'm going to go to the gym. I'll be back in an hour. That's not going to hurt my feelings. I just want everyone to know. It doesn't hurt my feelings one bit if you come in, place a trade, and then just leave. Or you come in, make money, and then you leave, right? You did your job. You did what you were supposed to do. You trade your plan. That's fantastic. So oftentimes when I'm trading by myself, I'll set up a trade like this and I'll just walk away. I'll go to the gym. I'll go read a book. I'll go vacuum, I'll go walk Highland, I'll do the dishes, I'll clean something, I'll reply to emails, I'll do a coaching session, or there's, it's working smarter, not harder. Because once you're in a trade, folks, I mean, there's really not much you can do. You just have to accept that you're likely going to lose on that trade. There's a high percentage chance, 50-50, you're going to lose. So just set it, walk away, come back, and then if you're right or wrong, you can do some analysis to learn from it and slowly make some tweaks. So that's Twitter. We're going to put on the list, watch and see what's going on. Sweet. Nice gap on Twitter. All right, so that's TWTR. We also have OCLR on here as a gap up. OCLR. This one's up very, very small. So it's only up 1% or close to 2%. And you'll notice it's not really gapping very much at all. You have a nice bullish looking candle on Friday. So I'm going to jot this down. OCLR. I'm just going to put this on another list because it's really not that exciting. If it was gapping up a little bit farther, like up to this blue level or something, a lot of buying on Friday, gapping up would likely lead me to believe that whoever bought on Friday would sell, locking in a profit. Simply looking at that candle from yesterday. That's all I'm doing is just taking that and factoring that in. Here's Apple, AAPL. Look at Apple pretty much every day. Apple is gapping up. You'll notice a percent. It's $1.4485. This is a pretty interesting gap because what I'm doing is I'm looking at the candles, these recent candles, looking at this one, and this one, and I'm noticing that if we're at 144.86, the high of yesterday, 144.30, the high of this day, 144.16, the high of this day, 144.60, and the high of this candle, 144.90. So you're getting a black candle gapping up, so it's a pretty decent bullish gap. The small downside is it is gapping up into a resistance, which is right about there, that blue line. It's a strong gap, though, in my opinion. So what I would do is I would hop down here to the 5-minute chart and kind of look at this pre-market, and you can see it's a very strong bullish trend pre-market, right? It's just kind of continuing higher. So it looks like I've already kind of drawn in a wave 1, 2, 3, or maybe something like this. So we can see this pre-market. So what I'll be looking for is, what do you guys think? Just looking at this chart, would I take the breakout or would I take the retest? And this will help you a lot, Angela, because you trade Apple a lot. But looking at this type of candle and this type of trade, would I look to take the breakout or the retest? Steven's got the correct answer. Danny's got the correct answer. Yeah, I'd look to take the retest because at this point, you're not buying low and selling high. You're buying high, hoping it goes higher, because the trend is already making us move. Now, that doesn't mean that I'm going to the trade won't continue to run. This could easily happen. And if that happens, then I'm going to miss the trade, right? You don't want to worry about missing trades, ladies and gentlemen, because you miss trades all the time. That's a fact. It's a guarantee. It's 100% certain that you're going to miss millions of trades every second. So why are you worried about this one trade that you missed? You're going to miss plenty of trades. Your objective is to be in control. Don't let the market control you. You be in control. So the way that you be in control is you tell the market exactly what you want it to do. So in this situation for me, I would go to a little bit of a bigger time frame. So now I know, here's your hourly chart. And I would kind of draw this support resistance that I mentioned earlier. Right, there it is. There's that support resistance. So what I would do personally, just like Danny and Steven said, is once it breaks out, if it breaks out, I want some closes up here. I want it to prove to me that it's going to go bullish, and then I will set up for a limit buy. And at that point, I can determine, do I want to take that trade blind, or do I want to take that trade watching the candles? And the truth is, folks, as counterintuitive as it may seem, blind trading is actually pretty good for newer traders. Right? For newer traders is actually kind of the road to go down, because if you are by the computer and you're looking at candles, you're often going to talk yourself out of the trade. So what you have to figure out first is how to overcome that fear of losing money and overcome the fear of being wrong. Because once you figure out how to get past that, then you can look at the candles, minute by minute, and take those trades. But usually blind trading is actually a little bit better for newer traders. And when I say blind trading, I just mean automated. That's all I'm saying. And not like, algorithms or programs or anything, but just like I was talking about earlier, an OTOCO or an OCO order. Because or just an OTO order triggers other, right? So it doesn't have to be super, super advanced if your broker doesn't have that capability. But most brokers, I mean, like 99% of brokers have the ability to trigger into an order and then trigger a stop loss. So worst case scenario, let's say you're with a broker for whatever reason that's semi-terrible and it doesn't have any of the cool advanced features for trading stocks, then you can do it where you create a trigger that just triggers your stop loss. And you can be gone for a little bit. But what you want to do is when you start trading, you want to teach yourself how to trade without caring, without emotion, and without really spending tons and tons of time doing it. You want to work smarter, not harder. You're going to take a lot of time learning candles, learning your support and resistance, learning your gaps, learning your support and resistance. That's fine. But at some level, you don't really want to be in front of the computer 12 hours a day, especially if you're not making money. If you're making money doing it, cool. If you really like it and you're profitable, you're like, yeah, I'm making $1,000 a day. I'm happy with this. All right, that's fine. I understand. But if you're not making any money and you're still in front of the computer 12 hours a day, you're just wasting time and you're wasting your life, right? There's no point in that. You can easily learn how to do this stuff and do it quicker and just enjoying most of your day. Here's a little scary fact, folks. You know why most people don't do this type of trading? It's not because they don't know how. It's because they don't have anything else to do other than trade. That's sad, but it's semi-true. I'm not talking about you guys. I'm just talking about other people in general. People down there, people I've coached in the past, it's like they don't, other than the trading, once they trade, they don't have anything else really to do. And that's why you hear me all the time talk about create something else that you want to work on, that you want to approach. If you're a minister at your church or a pastor, or you volunteer, or you go to a homeless shelter, or you substitute teach, or you read to your kids, your grandkids, or you clean the house, or you start another business, or you beekeep. Yeah, it can be anything. You garden, sculpt things out of wood. Go figure out something else to do. You have to. I mean, you all know me. I have other stuff that I do other than trading, other than working with students and coaching and emails and all that jazz. I mean, I do a lot of stuff with real estate. I do other business consulting. Help out I help people out with a lot of other things. Try to volunteer a lot of my time. Help, just assist, help out. So that's the thing, is a lot of people are kind of afraid of not trading because they don't have anything else to do. So find something else to do. Truly, something else that you like, something else that you love, something else that you might be able to make a little money in, maybe something else that you want to volunteer in, whatever it is. And then go do that during a lot of your trading, because it's just going to be a lot easier. You ever heard, type in one if you've ever heard the term, those who care least win most. Some kind of term like that. Yeah, that's the same situation, right? If you care too much about this trading thing, you're always there pining after it, it's in control of you. And if it's in control of you, there's nothing you can do. You're going to lose money. I know that sounds terrible, but if you let the market control you, you'll never make money. You have to be able to control yourself first, because the market's going to do whatever the market's going to do. and there's nothing we can do to stop it. So Snapchat is also up a little bit, and then we're going to look at 2 or 3 gap downs. So Snapchat, so looking at the daily chart, so it's gapping up a little bit, 22.67, very, very small gap. I don't know if it's going to do anything, but I'm going to jot it down on another list over here. Let's look at some of the gap downs. Some of the gap downs we have here. We'll look at 2 of these. ITCI. So the market opens in 4 minutes. So this one, oh geez, it's down 41%. 41%. This is going to be tough to even trade in general, because if it's down that low, you know, I mean, you're probably not going to be able to short it. It might not have any shares. I mean, I think it's just really free fall. We'll put it on the list, but I doubt we'll do anything with it. Because again, the percentages matter. The size of the gap down, you know, if it's gapping down too far, you can't play it anyway. I mean, literally can't trade it. If it's gapping down too far, you can't even short it. Brad typed in DAN. He wants to look at playing, and we'll look at NTRP. NTRP, we'll see what this one's doing. So this one has a little bit too light of volume. You can see that Friday had a good volume day, but that was it. The rest is like 140,000 shares. And it's also gapped down 44%, so we won't worry about that one. So it looks like the market's not doing too much today. But Richard said, do you focus on a specific gap size or range? Yes. So the gap size that I really like the most, my main initial focus is always in between this 3 and 9%. That's my go-to. 3 to 9% is my go-to. Like, I'm looking at those often. And then on the other spectrum, I got the 10 to 20 and then the 0 to 3. 0 to 3 is I'm going to put all the time. These are the stocks that I look at all the time. And you guys already know what those are, right? The Facebooks, Teslas, SPY, Apple, Google, Gold, Netflix. The ones I'm looking at all the time, the SPY, the Qs, right? Those are going to be on my list. And so I'm doing the 0 to 3% gaps. I'm factoring in their sentiment, and then I'll play them accordingly. 3 to 9% go to, and then the 10 to 20, they're going to be on my list as well. 20 plus, I'll watch them, but there's a very small chance that I'll trade them. By small chance, I mean like maybe 5 to 6% chance I'll actually trade them that day. Because 20% plus, most of the moves already factored in overnight, and you know, it might not move that wonderfully from there. Plus, if it's gapping down more than 20%, you're going to have what's called the SSR on, short sell restriction, which means it has to uptick before you can even short it anyway. And then sometimes you're not going to get the shares to borrow either. So a little bit of an interesting mix of what's going on. All right, market is open. Richard said, do you have a preferred time of day to trade gaps? I do. So the first 30 minutes is, so let's say this is 9 to 9:30 Eastern. So 30 minutes before the market opens, that's when I'm doing all my research and just going through things really quickly, figuring out what stocks I like. I usually have a watch list of about 5 to 6. Usually have a watch list of about 5 to 6 before the market opens, so that I can kind of figure out and determine exactly which stocks I'm looking for, what I want to do, and why. And I would say I probably place 30% of my trades from 9:30 to 10 a.m. Eastern. And then I probably place 60% of my trades from 10 a.m. Eastern to about noon, 10 a.m. Eastern to noon, and then I probably place 10% of my trades from about 12:45-ish to about 2:30 Eastern. I mean, I can probably think of one off the top of my head all year that I've traded after 2:30 Eastern, because that time I'm already in the trade. If it's like 2:45 Eastern, I mean, there's only an hour and 15 minutes left in the market open anyway. If I haven't found a good trade by then, I'm just not going to take it, right? There's no point in me even taking that trade. I never place a new trade in the last 15 minutes. I never place anything in the last 15 minutes of the market. As far as a day trade goes, I'll get in some swing trades at that point, but never a day trade. So yeah. Richard says, I end up with way too many to watch. The more is better fallacy. Agreed. And that's where it just comes into a rule, Richard. So you have to think about it in your mind as almost like food, right? If you have 3 pounds of meat on your plate, you're probably not going to eat it all. Right? I mean, you might, maybe if you're in a eating competition, but there's a good chance no one of us here can eat 3 pounds of meat in one sitting. I can do it. I'm really close. I can get close, but 3 whole pounds is a lot. Do you see what I'm saying, Richard? Jesse said, is that a challenge? I think so, man. I think it is. But yeah, guys, so that's the thing, is you approach it the same way that you approach anything else in life. Less is usually more. Right? I mean, if you have one kitchen table, or do you have 300 kitchen tables? You know? I mean, yeah, do you have one car, or do you have 450 cars? Some of you might have 2, some of you might have 3, some of you might even have 4, maybe you even have 5. But it'd probably be pretty impressively interesting to know if anyone here has more than 5 vehicles. Probably not. More than likely not. But you guys get what I'm saying? So the less is more in trading in just all aspects of life. So here's the thing, man. If type in a 1 if you want a challenge for May. We have a lot of challenges for May. There's a lot coming down the pike. But type in a 1 if you want a new one. I'll give you guys a challenge. It's a really, really hard one. Here's a new challenge for you if you want it. If you think you can stand it. Pick one day in this month of May. One day, whatever that day is. Just go ahead and pick it right now, and go ahead and type it into the chat pane. I'll do it myself as well. And I won't pick that one day because that's just too easy. Go ahead and pick one day in the whole month of May. Danny says May 7th. Well, do it, trading day. I'm sorry. I should have been more clear. Monday through Friday. Pick a day the market's open. Monday through Friday, market's open. I'm going to do the 24th of May. May 24th. Write that down right now. So May 24th, all day. What I want you to do is I want you to sit in front of your computer. I want you to have one ticker on your watch list. And I want you to not take one singular trade all day. I want you to have one ticker on your watch list. You can't have more than one. So go ahead and just have one ticker, whatever that is. Pick it. Doesn't matter. And that's all you can look at all day. And you can't take any trade that whole day long. How's that sound for a challenge? Sounds weird, right? You're like, that sounds strange. It is. Right? And so it's not a challenge to do it all the time. Good, good. So it will build a muscle that you didn't know that you had, I promise. It will build a muscle. There are a few of you here who have done it. There are a few traders here today who only trade one stock. And I know who you are. You know who you are. There are a few people here who only trade one stock. Now, I'm not talking about just per day. I'm talking about that's it. That's all they trade. That's all they do. Because you got to test your willpower, ladies and gentlemen. You got to test your discipline. You got to test your patience. You got to get over what's called the fear of missing out. I mean, I'm sitting here right now, and the market's been open for 6 minutes, and I haven't looked at anything. Not because there's nothing out there, just because I put in my mind that I don't care right now, and it doesn't bother me. You got to get over the fear of missing out, FOMO, as it's referred to. You have to get over that. The fear of missing out usually is derived from a mindset of scarcity or not having enough. And let me kind of give you a real quick breakdown of what I mean by that. I'm not talking about on one singular trade, guys. I'm talking about all the time. If all the time you're approaching the market like, oh man, I have to make money right now. I need to make money at this exact second in time. I feel like I'm missing the trade because I need to make money because I don't have enough money because I need more money. It's like I need more money so that I can have more money so that I can live a better life. I need more money right now. I don't have enough. And this trade is my ticket to having more money, so I need to take this trade. And I'm missing it. I'm missing all of this money that I could have right now, but I'm not. And so then you end up taking a bad trade and you lose money. I mean, mentally, that's what's occurring, by the way. In your brain, subconsciously, when you have FOMO, that's really what it is you are upset with all the things that you don't have and you want more and you're missing out and you feel bad that you're missing out because you want to have more of what you don't have. So you take some type of trade you should have taken anyway. That's all it is. Happens all the time. Step number one, you start appreciating and really, really appreciating what you have now. That's step number one. You have to appreciate what you have. And then step two, you can't really care. Don't care. And the way you don't care is you realize that you fully realize how many trades you are missing every second of every day. Right? You have to realize that first. Because when you realize all the trades you're missing, I mean, honestly, I've already missed $100 million in the last 9 minutes of opportunities out there in the market. $100 million and every 9 minutes is probably, it's going to keep going. I'm just going to keep missing out on opportunities. But I realize that. So once you get over the fact that there's no way you can catch it all, no one does, no one on this earth can or will or ever has, then you'll move on. And then number three, you start building a life that is not money centered. And that can help a lot as well. A lot of traders, especially ones that I've worked with in the past, they trade to make money. If you're trading to make money, you can change your approach and you're probably going to do a lot better. A lot of people think, oh, I'm going to get into the market. I'm going to trade the stock market. And what am I going to do? Here's the formula that the 90% of people, and this is why 90% of people lose. This is the formula that 9% of the people have in their brain. Ready for this? Stock market equals more money. Who can finish the formula for me? It's a transitive property formula that everyone has in their mind when they first start trading, including me. I'm the same way. There you go, Stephen. You nailed it. Thank you. All right. So this is the formula that most people create in their brain when they first start trading the stock market. And it doesn't have to be happiness. It can be whatever they, create in their mind. Stock market equals more money. More money equals better life or happiness or freedom or really success. It can be anything in their brain. The cool part is you got to figure out what that is. It's different for everybody. That I can assure you, but it's going to be similar to that. Most of the coaching that I do after a few sessions, if they're still not profitable, is I try to figure out what that formula is for that person. Because for me, it was success. More money equaled success. That's how it wasn't happiness for me, it was success. And here the best part is success to me equaled freedom. I was like, what do I really want to be? So here's what I did. You guys are ready? You want to know how I got past the formula? You want me to know the real secret? It's really simple. Just go find how to do this right here. Just figure out how to obtain the very, very end. And then all this will be given to you. This part will get dragged along because you're living in this world right here. Right? If you want to be happier, because more money equals happiness, then just be really, really happy right now. You can create happiness. Happiness is synthetic. It can be created. Your body knows exactly how to be happy, and your body knows exactly how to be sad, right? We all know how to create happiness in our body. We just choose not to. So if you approach the stock market from, stock market equals more money and more money equals happiness, happiness equals the freedom to do what I want to do, then just go do what you want to do now. Don't let this, why is the stock market going to hold you back? Design the life that you want right now to start doing it. And I get it. Here's the other big picture. Sorry, I'm getting so philosophical already before the market opens, but that's Mentorship Monday for you. I put myself in this mindset hours before it happens. So a lot of people will say, well, Jeremy, I can't do what I want to do because freedom to me is traveling to Italy every week, and then I want to go to Rome, and then Rome's in Italy, and then I want to stay there for 3 weeks and just simply drink wine at a vineyard all day, every day for 3 weeks, and then I want to go to Australia, and then I want to go to Brazil, and then I want to go to Portugal. And that's what I want, right? That's what freedom is to me, and I want that right now. And since I can't do that because I don't have the money, then I have to make more money in order to do that. Am I right? That's what everyone does. True freedom to me is doing all of this, and I can't do all of this until I have money, so I have to make more money in order to do it. That's not even close to being correct. It's not even almost accurate. Think about if that works in any other aspect of life. I'll give you an example. You ready? Hopefully this is a good example. But a lot of people want to have children. Am I correct? Type in 1 if you have a child. You want to have a child because you want a family, and you know the incredible love that's created with that, and the happiness and the joy and the boundless generosity and the legacy and everything that it's tied into that, and it makes you incredibly excited and happy and joyous and wonderful and makes your life better. So the problem is, does that happen immediately, Justin? Is that an immediate thing? Like if you're like, I want a kid, boom, and then it just happens, and then now everything is happy. Now everything is perfect. Now everything you wanted in life is just right there, and like, oh, I have a kid now. Now everything is perfect. Nope. I mean, first of all, it takes time to create children. I won't be going into that today, but you guys get the picture. You know what's happening, okay? It takes time. You can't, it doesn't just happen. And then when you have a child, and they grow up, and then that takes time. So nothing in life is just given to you the way you want it immediately, right? So if you want pure freedom, and pure freedom to you is doing all of this, guess what you have to do? Just like when you start making a family, you have to start, and you have to start small. In order to have 3 kids, you have to have 1 first. So in order to travel to Italy and to Brazil and to Germany and to Iceland and to Aruba and to California and to Australia and Japan, in order to go all the places that you want to do, you have to start first, small. You're not just going to be able to jump into that pool. And that's your brain telling you, oh, these are all the big things that I want. And since I can't have them, I'm not going to be happy. But that's not the true approach. The true approach is, if you really want it, then just go do it right now. Just go do it small, because it's always going to take time. Everything is. And once you realize that fact, all of this no longer matters. Once you know the formula to really, really, really achieve what it is that you want, because there's always a formula, folks. I promise, everything that you want has a formula. It's really easy to figure out. If you need help with it, let me know. I do this all the time. I figured mine out. Mine is freedom. That's what I want. Mine is freedom. I want to be able to do what I want when I want to do it. That to me is freedom. If I want to go somewhere, I want the ability to go somewhere and do what I want to do when I get there. But that doesn't just happen. You have to start small. You have to create, you have to start taking those building blocks and building it to create exactly what it is that you want. To get over FOMO, to truly get over the fear of missing out, you first have to figure out this formula to really get over it. You figure out that formula. If money was no object, what are you doing in life? And then just go start doing that bit by bit, slowly and steady, day after day, just working towards it. And then the stock market will become easy. Or I should say, the stock market will become simple. So that's my random discussion of gaps this morning. But not quite. It will help you, though, I promise. Trust me, it helped me a lot. Right? Like I said, you figure out that formula. And then the stock market part, that part's the easy part. Cheryl has a good question. She says, do the gaps work as well in swing trades as support and resistance? Absolutely. Yes, they do. So for example, Twitter, right? We were talking about this one bullish this morning. And I intentionally want to come back and look at this one for you, because you all might remember something. Type in a 1 if you remember my pre-market setup on Twitter. Type in a 1 if you remember my pre-market setup from Twitter. If you remember it, type it into the chat pane. What was my pre-market setup on Twitter? Because honestly, I could have been done for the day. I'm not, but I could have been. Type it in. What was it? What was my pre-market? Al got the entry right. Yep. Where was the stop? Remember the stop? So Al got the entry. Al says mine's 9 cents. Exactly. Beautiful. So my entry was $16.99 limit buy. My stop was $16.90. 9 cents of risk. So in that 20 minutes that I was talking to you guys, not doing anything in the markets, I could be up over 2.5 R right now. Why wasn't I? I care more about talking to you guys than I cared about making $1,000. Right? And that's just the way that is. So, fact of the matter is, that's a perfect example right there. Doing the analysis, setting up an automated order, walking away. I've done it countless times. I'll continue to do it countless times, but that's a strategy and a skill that you can easily come up with. It's not that difficult. It takes, a week or two of really good practice, and then you have it forever. So let's say I came back, I was washing dishes, and I came back to look at Twitter, and I was up 2.5 R. When do I exit? Well, that's going to be, a part of your plan. You should always have some kind of exit plan. Have some kind of exit plan. Do you remember my exit plan before the first 30 minutes of the day? First 30 minutes is if I ever get 4R in the first 30 minutes, 3R in the first 30 minutes of the day, I'm done for the day. That's my rule. If I get 3R in the first 30 minutes, I'm done. Could I have set that up all as an OCO order? Sure. Totally. Why not? 3 times 9 is 27. So that would have been right about here, would have been 3R. So I could have been done for the day without even being by the computer. I mean, that's power, my friends. That is sheer power. And now guess what it's doing? So now here's your resistance right here. Just like I talked about earlier today, before the market opened, now like I said, you had 2 choices. You can either do a limit buy down here, or when it breaks out, you can set up that order as a limit buy at that resistance. No one knows if either one of those trades is going to work. No one knows in advance. You never knew. So since there are people here who are interested in a few other stuff other than Twitter, I'm kind of sad that our order didn't trigger right here, but I'll leave it open for another day. Apple was also a great gap. You'll notice Apple hasn't really retested this resistance yet. So Apple's up 1.5%, not quite retesting, but did make a new all-time high today. It's a very, very strong gap on Apple. So now I'll be looking at this. So the previous all-time high now is 145.46. And it did kind of retest that a little bit. So at this point on Apple, you'd be looking at something like this. Some type of retest like this on Apple. Right, so that's a retest at all-time high. So remember this limit buy that we talked about earlier. You want to get in on that pullback, right? This is a great gap, but you don't want to take it on a breakout. You want to take it on a pullback, which means you could miss the trade, and that's okay. Very beautiful gap, very nice little move. You could have also, another pullback thing that you can use is when you do this and it actually does pull back and you don't actually catch it right here, but you take it above the high of a bearish candle. That's also taking the pullback. If you get this, and then as it starts popping, you have this bearish candle right here, and you just set your entry above that with a stop below it. That's an entry price I use a lot. Meaning if you don't catch this little wick right there, if you don't actually catch that low. ICTI, like I said, we're really not going to do anything with this one. DAN didn't actually gap. US Steel down a little bit lower. So we're going to see US Steel probably does close below 21.75 today. EGHT, that's a pretty nice gap. Down to a little bit of support right now. And then HTA, Healthcare America, nice little gap as well. Here's the 5-minute chart. We'll see how that plays out. So looking at the broad markets today, SPY kind of flat, a little bit of a gap up, but not too bad at all. The Qs obviously moving higher because of Apple hitting an all-time high, Facebook hitting an all-time high, Netflix crushing it. Netflix is at an all-time high. A lot of the tech stocks really moving here. And this move on Netflix is looking gorgeously beautiful. So looking for Netflix to come into $7. Richard said, "Do you say X would or would not close above 21.75?" I said neither. I don't think so. I said so. US deal. I'm looking for it to close below 21.75. It probably will. It probably will, but it's a retest gap, right? Black candle gapping down. So this is retest number 1. This will move right there, and as it's breaking out, if it can close below 21.75, then that's when I'll say to myself, all right, let's see if then I need a retest again, and I'll short the retest on US Steel. Nice job making a profit on X. Yeah, but I'm not entirely sure if it does actually close below there or not. Unfortunately, it probably does. Probably does. But this is a great example right here. I think Cheryl asked about that gap as a support. So this is where the gap started a few weeks ago, right there, and that is going to be a support resistance. So you can use gaps as a support and resistance tool. Previous gaps. So here's kind of the low of that gap right over there, and you'll notice that low was also a resistance. So yep, you're totally correct. They can, and if you're wondering how do I determine if they're a support and resistance, well, really at that point, you're just looking at, is the stock above or is it below? You know, if it's above the gap, then the gap will act as a support, and if it's below the gap, then the gap will act as a resistance. That's just another resistance line that you can have in your repertoire when you're creating your chart. Tesla also looks nice, I agree. Climbing up. So Tesla's at an all-time high. So yeah, the Q's rocking and rolling right now. Amazon retesting. That was quick. Thought maybe it would take another day. Google. All right, we're doing work. So the swing trades we got out of PVH, feeling pretty good about that, and we got out of EA on Friday. It would have gapped up to the 2R target today, but again, we almost got it on there, so it's totally fine. O'Reilly, O-R-L-Y, O'Reilly sinking. So we're getting some gaps on our watch list. This is good. Like I said, we're going to go back and try to figure out some trades. But hopefully the first hour of Mentorship Monday was helpful. I know it went down the philosophical road. I try not to do that all that often because some people care, but some people don't. Even though I personally think it's the thing that you should care about the most. So what I'm going to do is I'm just going to take a quick bathroom break for about 120 seconds. And then I'll come back and we will start crushing it again. If you have any trades in between now and then, feel free to throw them in the chat pane. If you have any questions between now and then, let me know. But I'll be back. Thanks so much for tuning in to the first hour of Mentorship Monday. You guys rock.